Oh, we're already getting many questions, and these are wonderful. And we are going to address a lot of them really quickly. But we will go ahead and get started. Hello, everyone. Welcome. I am Lindsay Perkins, the Director of Communications and Marketing for Plugin America. We do want you to know that we are recording this webinar, and we will send you the link in the next few days. And throughout the webinar, if you have any questions, please put them in the Q&A box. We have a team that will be answering them as we go. And then at the end, we will also be answering them verbally after we are done with our presentation. Now we'll go on to the agenda. So I'm going to introduce our speakers that we have on the line today, who will explain what we do at Plugin America very briefly, give an overview of the EV landscape, provide updated guidance on the clean vehicle tax credit. That includes new vehicles for consumers, used vehicles, and commercial vehicles. I also saw a question about leases. We are going to be discussing that. Then we'll talk about what's next, provide some resources, and then answer all of your questions at the end. So today we have with us Joel Levin, our passionate executive director who leads the entire Plugin America team. He has been with us for almost 8 years now and is also chair of the Global EV Drivers Alliance, which links together EV driver associations from around the world. He is based in LA, and his household has not one, but 2 EVs. You will also be hearing from Ingrid Malmgren, our spectacular policy director, who has over a decade of experience advancing sustainable energy and transportation electrification through research, utility regulatory proceedings, and legislative advocacy. She is in Vermont and has been driving electric since 2016. And now I am going to turn it over to Joel.
Thank you, Lindsay. So we're going to start out with a short poll just to get a sense of who is with us on the line today. So we're going to have about 30 seconds for people to fill this out, just to for us to get a snapshot of you guys, because we have a huge number of people today, probably something close to 1,000 people joining us. So first question is, what best describes you? Are you a consumer, car dealer, manufacturer, from a utility? Do you work with a nonprofit, a government agency, professional services, or something else? And then second is, are you currently in the market, or let's say within the next 12 months, for an EV or plug-in hybrid? So yes, no, or maybe later. And we'll give people a few more seconds to fill those out, and then Lindsay will report back with us on the results. But we have just a very large number of people on the call with us today, and we're really excited about that. Obviously, people are very interested in these tax credits, so let's get a sense of who is there. Are we ready, Lindsay? Or
yeah, everyone, we still have a lot of voting. It looks like we have a lot of consumers with us today, which is great. We are so happy you're here. We'll give everyone maybe 10 more seconds to answer. Okay. And here we go. Lots of people chiming in here. So we have a lot of consumers, and then a lot of people in the market immediately looking.
Oh, this is great. So 61% of people are currently looking. That's cool. Okay. So, all right. So that was our poll. So let me tell you a little bit about Plugin America. Probably a lot of you know us already. We're a nonprofit organization nationwide. We've been around for probably 20 years in one form or another. We're dedicated to accelerating the use of electric vehicles around the United States. We do a mixture of public outreach and education. We're pretty much the national leaders on building public outreach and awareness around EVs. We're one of the hosts for National Drive Electric Week and Drive Electric Earth Day. We operate plugstar.com. which is worth checking out if you're in the market for an EV. It's a brand neutral tool that walks people through the whole process of buying an EV and thinking about what your needs are and what's a good car for you. We have our EV support program that takes calls and emails to give people good advice around EVs. We also do advocacy to promote good government policies around EVs. And we are a nonprofit 501c3, and we are supported by support from the public. So we put on events like this, and if you feel like you get value out of this today, we encourage people to make a contribution, and there'll be a link later where you can do that. But anyway, this is free, and we're really glad that you're here with us today. So just to give you a sense of the EV landscape, I feel like this is a real milestone. The fact that we're on the phone today and that we're talking about these tax credits. The original EV tax credits date back a long time. They were originally signed into law by George W. Bush quite a long time ago. And it's been, because of the limit of 200,000 vehicles per manufacturer, it's been obvious for a really long time that we would need something more, that the original tax credits, while they were really an important milestone at the time, weren't going to get us where we need to go with 100% EVs. And so Plug-in America has been advocating for probably more than a decade, longer, well, way before I was here, to advance and expand the tax credits and to bring in more federal resources for EVs. And we've been pushing on that for years and years, with lots of ups and downs along the way. The Inflation Reduction Act, which finally got these credits into law, was signed last August. But the actual guidance around it has been coming up in dribs and drabs. There was really important guidance that was released by the IRS on December 29th. So we've just now been able to sort of digest it and understand what it means. There's still more that's coming in the future that you'll hear about. So it's really a pivotal time for the EV industry. We've been working on this for, as I said, probably a decade plus. So really excited to have these credits here. They're not perfect. There's ways we would want to see things different, but they're really a huge step forward. Tremendous resources for EVs, and really an exciting time for us. So I'll stop there and hand things over to Ingrid, who can dive into the credits a bit more and help people to understand what they are and how you can use them.
Great, thanks, Joel. Quick housekeeping. This guidance is from FS 2022-42, which was published by the Internal Revenue Service and the Treasury on December 29th. So it's interim guidance. And then additional guidance can be found through the Department of Treasury's press release. There's a live link here, and we'll be posting this webinar. And it's available on our website as well. And this information that we're presenting today is our best interpretation of the guidance. We don't guarantee its accuracy or that what we have shared will ensure a consumer will be eligible for any tax benefits. So we highly recommend that if you are interested in getting a tax benefit, a tax credit, that you consult a tax advisor or legal counsel. So thanks so much for joining us today to learn more about the clean vehicle tax credits. There's a lot of information that's been released recently, and we hope that today we can provide you with what you need to know to help you get the most out of these tax credits. A quick note about the language. Fuel cell vehicles are eligible for tax credits, but in this presentation, I'll be focusing on how these tax credits pertain to electric vehicles. I will use electric vehicles, the term electric vehicles, to mean both all electric vehicles and plug-in hybrid electric vehicles. When I need to differentiate between the two, I will. Otherwise, I'll just refer to both of them as EVs. So let's start with the three types of clean tax credits that are part of the Inflation Reduction Act. There are tax credits for new clean vehicles, previously owned or used clean vehicles, and commercial or business clean vehicles. 30D, which is the name of the tax code for the new clean vehicle credits, has been around for a while, as Joel mentioned. This legislation extended the tax credit with some changes. The used and commercial clean vehicle tax credits are both new and took effect on January 1st. So a few rules apply across the board to be able to take advantage of these incentives. First of all, these are tax credits. At least for now, the vehicle purchaser must have tax liability. You only get one credit per vehicle. There's no double dipping. The taxpayer must include the VIN or vehicle identification number on their tax return. The vehicle must be made by a qualified manufacturer. That means a manufacturer who enters into an agreement with the Secretary of the Treasury. And the vehicles cannot be acquired for resale. So you can't just get the tax credit and flip the vehicle. The vehicles must have a gross vehicle weight rating of under 14,000 pounds. So gross vehicle weight rating means the weight of the empty vehicle, the passengers, the cargo, and the accessories. So basically, it's the safe operating weight of the vehicle. The vehicle must be propelled by an electric motor of at least 7 kilowatt hours capacity, and it has to be able to be charged from an external source of electricity. So it needs to be a plug-in electric vehicle. And it must be manufactured for use on public streets and have at least 4 wheels. So unfortunately, this won't work for motorcycles or e-bikes. So we're only on slide 2 of my part, and we're already getting into exceptions. There is an exception on the last 3 criteria for the commercial tax credit. Commercial vehicles over 14,000 pounds are eligible for a $40,000 tax credit. They're required to have a minimum battery capacity of 15 kilowatt hours, and they can also be mobile machinery. So that means that they can be used on and off-road for mining, farming, and other vocational uses like a garbage truck or delivery truck. So let's start with a new clean vehicle tax credit. In order to be eligible for the new clean vehicle tax credit, the vehicle and the purchaser have to meet the criteria in the left-hand column of this chart. The vehicle must meet MSRP caps and final assembly criteria, meaning that it has to be finally assembled or put together in North America. The taxpayer has to meet income limits. In the Inflation Reduction Act, the new clean vehicle tax credit amount is based on battery sourcing requirements, including critical minerals and battery components. The tax credit is divided into 2 equal parts of $3,750 each. And in order to get the full tax credit, both of these criteria need to be met. But this presentation is about interim guidance. And the interim guidance, which was released by Treasury and the IRS on December 29th, these battery sourcing requirements will not be in effect. They won't be in effect until the IRS issues additional preliminary guidance, which they expect to do in March. So here's the timeline of the new clean vehicle tax credit. The guidance we're discussing today went into effect on January 1st of this year and is expected to change in March. So it's a really brief window. And that's when the IRS plans to issue proposed guidance on the battery sourcing requirements, including critical minerals and battery components. Once the proposed guidance is released in March, it will go into effect immediately. Since the battery sourcing requirements aren't currently in place to determine the amount of the tax credit, how will we know how much these credits are? So Treasury and the IRS are using the same formula they've used in the past for 30D, and it's based on battery capacity. The tax credit's calculated with a formula. Without going into details, we can say that all of the all-electric vehicles currently available in the US marketplace have large enough batteries to qualify for the maximum tax credit of $7,500. And all plug-in hybrid electric vehicles qualify for the minimum tax credit of $3,751 or more. So all of them qualify for at least the minimum, but many of them will qualify for more. Another thing to note with the new clean vehicle tax credit is that the $200,000 vehicle manufacturer cap has been eliminated. This means that Tesla, GM, and Toyota vehicles are once again eligible for the tax credit, assuming that they meet the other vehicle requirements. One of the new criteria for the tax credit is the manufacturer suggested retail price cap. SUVs, pickup trucks, and vans are subject to an MSRP cap of $80,000, and all other vehicles are subject to a cap of $55,000. These categories are defined in the tax code, but they're definitely not intuitive. I recommend that you look them up on the IRS website, which includes lists of qualified manufacturers and a vehicle index. It also includes the applicable MSRP cap assigned by the IRS. So there are definitely some rather difficult to understand categorizations in this. For example, the Tesla Model Y with 7 seats, which is a $3,000 upgrade, is subject to the $80,000 price cap, whereas the same exact vehicle with the same size battery with a 5-seat option is subject to the $55,000 price cap. So based on the current listed price for the Tesla Model Y, it would not be eligible for the new vehicle tax credit. So definitely, I want to encourage you to check the IRS website to make sure the vehicle you want qualifies for the tax credit. In summary, for the new clean vehicle credit, between January 1st and March, to be eligible for the tax credit, the taxpayer needs to meet the income limit and the vehicle needs to meet the MSRP caps and the final assembly requirements. For this brief time period, the tax credit amount is based on battery capacity and not the battery sourcing components. Expect this guidance to change in March. Next, let's look at the used EV tax credit, which just became available January 1st. So to meet the requirements for the used EV tax credit, the vehicle must be at least 2 years old and under $25,000. The vehicle also has to be sold by a dealer. Unfortunately, you can't get it from your uncle or your cousin. There are income caps for consumer eligibility, and the credit amount is $4,000 or 30% of the price of the vehicle, whichever is less. This guidance for the used EV tax credit became effective in January 1st and is expected to be in effect until the tax credit expires in 2032. Some additional details about the used EV tax credit include the used vehicle purchaser cannot be the same person who bought it new. That means that you can only get the used EV tax credit on a vehicle that is new to you. Each vehicle is only eligible for the used EV tax credit once. The purchaser cannot be claimed as a dependent on another taxpayer's return. So if your 17-year-old kid wants to get a used EV and you're claiming them as a dependent, they won't be able to get the tax credit. The taxpayer can only use the previously owned clean vehicle credit once every 3 years, and businesses cannot receive this tax credit. In summary, the used EV tax credit went into effect January 1st and is expected to remain in effect through 2032. There are no additional sourcing requirements for the used EV tax credit, such as critical minerals, battery components, or final assembly. Finally, let's talk about the commercial EV tax credit. The commercial EV tax credit has very few requirements compared to the other two, particularly compared to the new consumer EV tax credit. The vehicle must be made by a qualified manufacturer and it must be used for business purposes. The credit amount is 30% of the sales price for all electric vehicles or 15% of the sales price for plug-in hybrid electric vehicles, or the incremental cost of the vehicle, whichever is less. Now, the incremental cost of the vehicle is the cost difference between the clean vehicle and a comparable gas or diesel powered vehicle. So that's the credit amount, but the credit is capped. So it's capped at $7,500 for vehicles less than 14,000 pounds and $40,000 for vehicles over 14,000 pounds. The commercial clean vehicle tax credit guidance became effective January 1st and is also expected to be in effect until the credit expires in 2032. So unlike the new consumer clean vehicle tax credit, the commercial clean vehicle tax credit has no battery or mineral sourcing requirements, no final assembly requirements, no MSRP caps, and no income limits on taxpayers. This means potentially that a business could purchase EVs that don't meet some of the requirements of the consumer EV tax credit, such as vehicle price, final assembly requirements, or the battery sourcing requirements once they come into play. And then the business could lease them to consumers. From a consumer perspective, this may offer opportunities to access tax credits that you might not normally have been eligible for under 30D. But there's no guarantee that the tax credit will be passed on from the business that leases the vehicle. To summarize, the commercial EV tax credit has fewer criteria that the consumer and vehicles need to meet. In addition to being very attractive for businesses, this could be an option for consumer leases if the business leasing the vehicles passes on the tax credit. So this slide just shows a final summary of the 3 types of EV tax credits and which criteria apply to each one. So not much is expected to change with the used EV tax credit or the commercial EV tax credit, but for the new clean vehicle tax credit, expect the requirements to change in March when the IRS issues preliminary guidance on the battery sourcing requirements. And we don't know which vehicles will be eligible for the credit once that happens. We expect the rules to be complex, and it's very possible that few or no vehicles will be eligible at that time. So the key takeaways from this presentation today is that if you're interested in purchasing a new EV, plan to take delivery before the new guidance is released in March if you can get your hands on one. Also, leasing seems like a great workaround to some of the requirements, but there's no guarantee the full amount of the tax credit will be passed on to you. The used clean vehicle tax credit has fewer limitations, as we talked about. So if you meet the income limits and cost cap, this could be a great way to get into an EV. And then finally, check the IRS website to find out which vehicles are eligible and the MSRP limits on that vehicle. Be sure to compare that with the MSRP of the exact model and trim level of the vehicle you plan to purchase to make sure that the vehicle you want to purchase qualifies. So here's some important resources. And the first one is where you look up the MSRP caps to find out which vehicles qualify and at what price point. The VIN decoder, it will tell you whether a vehicle meets the final assembly requirements. And you can look up the actual VIN of the actual vehicle you wish to purchase. You would only need this for the final assembly rule, and you would use that only for the consumer new clean vehicle tax credit. You would not need this for the commercial or for the used vehicle tax credit. So definitely check out our tax credit resource page on Plug in America's website. And PlugStar is a tool that can help you select an EV and includes a lot of information on incentives. And then feel free to contact our EV support team to receive one-on-one personalized assistance with questions about vehicles, charging, incentives, and more. If you found this webinar valuable, please consider donating to Plug in America, and you can find information on that on our website. So now I'd like to open the floor to questions. Thank you very much for your time and attention. And now we hope to answer any questions you have.
And please, as a reminder, put those questions in the Q&A box instead of raising your hand. That's where we're seeing questions come in. And we have our first question from Ellen. And she wants to know, are income limits for income earned in 2022 or 2023?
Ellen, that's a great question. So the income limits are for the higher of the two. So they could actually look back to so they will be for the year you purchased the vehicle or the preceding year.
Okay. And then from Jameson, is this an MSRP cap or a purchase price cap?
Jameson, that's a great question. So this is the MSRP cap. And basically what the MSRP cap includes is it includes all of the accessories up to the point of delivery to the dealer. It does not include additional accessories that are provided at the dealership, and it doesn't include fees or destination charges or taxes.
Okay. And then we have Bri. I bought a Tesla Model 3 in September 2022. Do I get a tax credit for 2022?
Sorry, Brian. You don't. No, Tesla was not available. Tesla had met the 200,000 vehicle cap, and that did not get lifted until January 1st of 2023. So sorry.
Okay. And someone says, and this is another similar question about the MSRP. If I buy a vehicle with extras, do I lose the whole tax credit if the extras put the total over, or is it solely the MSRP that matters?
So the answer to this question is it depends where the extras, it depends where they were installed. So if the extra is getting all-wheel drive on your vehicle, and maybe it has dual motors and that pushes it over the price limit, then it's not going to qualify. If the extras are, I don't know, floor mats or something, or some extras that are installed at the dealership, then it could still qualify, assuming that it arrived at the dealership within the MSRP cap.
Okay, great. And we do have another question. As this tax credit is a little confusing, you are not alone in your confusion, and that's why we are here doing this webinar. So someone asks, are all Model Ys not eligible?
So the Model Y with the 7-seat variation. Okay, so first let me qualify the time frame. Between January 1st and when the new Treasury IRS guidance comes out in March, the Model Y 7-seat version is eligible for the MSRP limits. So it's a $3,000 upgrade to go from the 5-seat to the 7-seat version. But the 5-seat version is more expensive than the MSRP cap. So for $3,000, so then you're getting a net of $4,500. So the 7-seat version is eligible.
Let me jump in and say that seems weird, but you can see that on the IRS website. It actually shows that.
Yeah, it is weird.
And we also, on our resource page about the tax credit on the Plug in America website, we have listed the different models that are eligible and what their price caps are to make it a little bit easier for you to do shopping.
And I just want to caution everybody that the IRS guidance, even on the price caps, could change at any time and on the models. So I would check PIA's page, but I would also check the Treasury page because it could change it every time at any minute.
Okay. And then we have another question. Can you double dip? If I buy 2 or more cars, can I get the appropriate credit for each?
I believe that it's 1 tax credit per person yes. So I don't think you can get 2 tax credits, but I will have to look into that. I think it's 1 tax credit per person for the new clean vehicles, but I need to check. So I will look that up and I will post that on our website.
Okay, great. And then we have from Colette Scherer, what day in March must you submit this info to the IRS?
So I assume you're referring to the VIN, but I think maybe what you're asking is when the new guidance is coming out, like when this interim guidance ends, and we don't know what day in March that would be. The info that you need to provide to the IRS would just be on your tax form. You would need to provide the vehicle identification number and obviously information about your taxes and tax liability.
Okay, and so Don Green asks, so you have to take delivery before March 1st, not just have a signed purchase order, correct?
Yes. So the timeline that the IRS is looking at is when you take delivery, and when they are referring to it as when that vehicle goes into service, but it's technically when the consumer takes delivery. And March 1st isn't an exact date. We don't really know when in March Treasury will release their guidance. It could be March 30th. We really don't know, but to be on the safe side, we would encourage you, if you want to take advantage of this window of opportunity before the battery sourcing requirements come into effect, I would definitely aim toward pre-March.
Okay, great. And then we have Jay asking, what are the income limits? Do you think you could go back to that slide to
sure.
show income limits for new vehicles?
Yeah, let me bear with a second. Let's see. Okay, so the income caps for the new clean vehicles are 150,000 for single filers, 225 for head of household, and 300,000 for joint filers. So they're fairly high. I think only about 10% of the population would be higher than that. So as far as the income caps are concerned, the vast majority of the population should be eligible.
Okay. And how do we have someone asking, how do we start the process for the used EV tax credit? Is there a list of dealers who can manage the used credit? And maybe also for the dealers on the call, how do they handle the used credit?
Okay, so this is a great question. I believe the dealers have to actually get in touch with the IRS. But they should, I assume they'll be getting information from the manufacturers in general with regard to the tax credits. There's definitely reporting requirements that the dealers have to provide a report to the taxpayer and to the IRS whenever they sell a used clean vehicle. So I think your first step would be to go to dealers, but this information has just come out. And so my guess is that there would be a lot of dealers who aren't familiar with it, and you may have to actually provide some education to them.
Okay, great. And then is it a point of sale rebate or a tax credit against tax liability?
It's a tax credit against tax liability. They are looking in 2024. Part of the IRA was that there would be a point of sale off the hood rebate starting in 2024, but the IRS has not published the details of that yet. And it won't be in effect till next year.
Okay. And then Arian Erickson asked, it looks like Kia and Hyundai are not yet qualified manufacturers. Do we know when they will become qualified in order to be able to pass through the credit to their lessees?
Okay, so that's sort of a two-part question. So Kia and Hyundai are building a plant, an assembly plant in South Carolina, and they will not be eligible for the final assembly rule of the new clean vehicle tax credit until those vehicles are actually assembled there. So until they start rolling off the line, and it will only be the vehicles that are assembled there. So it could be a while before that's up and running, and you would have to purchase a Kia or Hyundai that is from that plant, was assembled at that plant. And that's where the VIN lookup comes into play. And then the second part of the question, Lindsay, could you reread the second part of the question?
Sure. Do we know when they will become qualified in order to be able to pass through the credit to their lessees?
So as far as leasing is concerned, if you wanted a new EV6, a Kia EV6 right now, you could go out and you could lease an EV6, and the owner of that vehicle, that's the lessor, and it might be the manufacturer, it might be another financial company. The owner of that vehicle would be eligible for the commercial tax credit. So you could lease that now, and we would encourage you to ask your dealer about getting that tax credit passed on to you to bring down the cost of the vehicle.
Yeah, let me jump in there and emphasize that point. So leasing is potentially a great workaround for a lot of these requirements, because when you lease, you don't have the MSRP cap, you don't have the North American assembly requirements, you don't have the income cap, but it depends whether the manufacturer is going to be claiming that credit and whether they're prepared to pass that through to a consumer. So potentially you can get that credit for any car, but that's a conversation you need to have with the dealer.
Yes. And our next question comes from Rosemary Muscali. Do the MSRP and income limits apply to the interim period before guidelines are issued?
Yes. For the new clean vehicle credit, all of the criteria, if you look at what's showing on the screen now, all of the overall criteria in the left-hand column do apply between January 1st of this year through March when the new guidance comes out. So they are in effect now. So if you wanted to purchase a car, it would, with the new clean vehicle credit, and take advantage of that, it would be subject to the MSRP caps, the final assembly rule, and the income caps.
Okay. Our next question, and we have hundreds of questions coming in, so we are doing our best to get to as many as we can. And we appreciate your patience, and we're so glad you're here learning. So this question asks, assuming no or very few new vehicles are eligible for the tax credit in March after the new guidelines are released, do we have a sense of how long it will take for manufacturers to build eligible cars? And might the IRS reduce the MSRP in the short term for non-eligible vehicles?
Okay, so that has a lot of parts too.
Yes.
Okay, so with regard to the critical minerals and the battery component sourcing and the guidance that will be coming out in March, the expectation is there may not be any vehicles available The IRS is discussing having like a 2-year period of preliminary guidance. And honestly, I'm not really sure what that looks like. They did publish a white paper that talks about how that would be determined. But it's really up in the air now. So I would say that do not intend to have a vehicle meet those criteria during that time. And I'm not sure if there will be any sort of waiver or anything coming from the IRS. That being said, manufacturers are suggesting that it could be years before they understand the supply chain of the batteries and are able to not only understand it, but also be able to track where all the minerals are coming from. It's, as you know, it's very complicated. And so I know that Mary Barra from GM said it could be 2 to 3 years before they can produce eligible vehicles. But it also depends on the additional guidance and exactly how they measure the value of the critical minerals and how they define the different countries and free trade agreements and things like that. So yeah, there's a lot of guidance forthcoming in this area, but it's not looking super promising for availability starting in March. But yeah, we're not really sure what's going to happen. Was there another part of that question to Lindsay?
It was just, would they reduce the MSRP in the short term for non-eligible vehicles?
So as far as I guess you're referring to the manufacturers or the OEMs, and that would be up to the manufacturers or the OEMs. I think there's enough of a demand for EVs right now that I would say it's probably unlikely.
Let me jump in. So to sort of put a finer point on that, we don't, we really, what happens with the guidance in March is very up in the air. When you read the guidance on its face, as Ingrid pointed out, it seems really complex and really, or the law that seems complex and it seems difficult for manufacturers to achieve, but we don't really know how the IRS is going to implement it and what flexibility they're going to provide. So that's why we say we just don't know. I mean, it's possible there'll be very few vehicles eligible, but it's possible that there will be. It's just very up in the air. So we just want to sort of people to understand what it's uncertain, but there's if you go out the
yeah, it does. They did, Treasury and IRS did issue a white paper, and it basically says that they currently anticipate proposing as a transition rule for 2023 and 2024, a 3-step process for determining compliance. But even that process is extremely complex. So I'm afraid we just don't have a good answer for you on that.
Yeah. So if you're looking at a vehicle, buying a vehicle that is eligible now, and you're serious, you might want to try to get delivery of it before March.
Yeah, if there's any way possible. This is a really unique opportunity to have access to the tax credit without the battery sourcing requirements.
Okay, and now we have a question from Zach Carpenter, who says, we will be filing for this credit in early 2024 when we file taxes, correct?
Yes.
What if the vehicle is suddenly excluded in March when the new guidance comes out?
Then it depends when you took possession of the vehicle. So if you'll be filing next spring, but if you got your vehicle before the new guidance came out, so if you got your vehicle in February, then it would still be eligible. If you got your vehicle in April and the new guidance had been released, then you would not be eligible. So it's all based on when you take possession of the vehicle.
Okay. Next, we have a question from Timothy. If a plug-in hybrid EV has a battery capacity greater than 11 kilowatt hours, is it qualified for the $7,500 credit, assuming all the other qualifications are met?
Yep. Yes, it is. So it's based on the battery capacity and not whether or not it's an all electric or a plug-in hybrid electric. So if you exceed the 11 kilowatt hours, then you're good to go with a full tax credit amount.
Okay. And so we have a lot of you asking, are the dates when you order the vehicle or when you receive it? And we just want to emphasize it is when you actually receive the vehicle.
Yep. When you take possession of the vehicle. The term the IRS uses is when the vehicle is put in service. But basically it means when you take delivery. So that is the date to go on. So if you took delivery in 2022, you would have to go with those rules. If you take delivery between now and March, you would have these interim guidance rules. And after March, it would be subject to the battery sourcing component rules or the battery sourcing rules.
Which leads us into our next question from Bill Snyder, who wants to clarify, does battery sourcing mean battery components, or does it mean both battery components and critical minerals?
So when I say battery sourcing, I'm just combining critical minerals and battery components because there's a lot of words there. So battery sourcing includes both. It means the critical minerals and the battery components.
Great. And then Sebastian asks, why are the Volkswagen ID4 all-wheel drive Pro and the ID4 Pro classified differently for MSRP caps?
Yeah, that's a great question. And I cannot answer that question. I looked up the statutory guidance in the tax code and I could not, it's actually quite simplistic how they determine, but the classifications on the IRS website are completely inconsistent with that. So I've spent a lot of time looking at it and trying to figure it out. And I've talked to a lot of people and we've discussed it. And so far, nobody has come up with a great answer as to why those classifications are the way they are. There are definitely vehicles. There are definitely both all-wheel drive and two-wheel drive vehicles in the 55,000 cap category. And I'm afraid I just don't have a good answer for you. I'm not sure how they determine the classifications, but I'm certainly still looking into that because it's something I'd really be interested in knowing.
Great, thanks. And then we have a lot of questions about how dealers now have to provide information to the IRS. And do we know if they know how to do that at this early stage? And one thing that we're doing at Plug in America is educating dealers about this. So that is something that you should be aware of, though, when you go and talk to your dealers. And we are also, though, doing our best to inform them. Now we have Kevin asking, do we have any information on the IRA EV car charger incentives or alternative fuel refueling station incentives?
Yeah, so that is tax code 30C, and we do not have additional guidance at this time. Treasury and the IRS did ask for comments. They issued a request for information, and lots of stakeholders provided information, but they have yet to release guidance on the chargers.
So once we know more about that, we will probably be providing information on that. I expect we will, either sort of a blurb on our website or maybe a webinar or something. But when we have better guidance on that, we will definitely share it with people. But yeah, we're still waiting on that.
Yeah.
And then Bob Barrett, will there be any vehicles in the US that will meet the new requirements after March?
So I would guess, so first of all, we're not entirely sure exactly what the new requirements in March will be. So we can't really speculate as to whether any vehicles will meet those requirements. Based on a straight reading, it would seem like no, but we really, not knowing the guidance, we can't commit to whether there will be vehicles available.
Okay, and then
We
forgive me
hope
if yes.
Yeah, we do hope so.
Forgive me if I asked this before, but we have so many questions coming in. Is the income limit based on gross income or adjusted?
Oh, it's modified adjusted gross income.
Great. Someone wants to know, is there a way to ensure that dealers submit the required information to the IRS on a new purchase?
That's a good question. So I'm just trying to look in my notes because there was guidance that was issued specifically regarding dealers and manufacturers and that they have to submit written reports. But I think that kind of comes down to the relationship with the dealer. I'm just looking, the sellers must submit reports to the taxpayer and the IRS for 30D and 25E. So you would get a report by the date of the sale. So I think that's sort of helpful in this area because the seller must provide a report to the consumer by the date of sale, and then they need to provide the report to the Treasury Secretary within 15 days of the end of the calendar year. So if you have a report, then I think that it would give you the authority to claim that on your taxes with the assumption that the seller would submit the same report to Treasury. So it gives you some confidence there.
Okay, and Richard is asking, is there a list of 2022 vehicles that meet all criteria?
Well, 2022 vehicles don't have to meet all criteria. Are you talking about model year 2022 vehicles? Oh, I bet you're talking about model year 2022 vehicles. I'm like, what?
Probably
so you're saying if you, I'm sorry?
I'm guessing that he's talking about vehicles that are delivered in 22, because that's sort of what matters.
Because that's what I was thinking too, but then I was thinking maybe because the models on the IRS website are all 2023 models. And so, yeah, I guess the question could be interpreted either way. So if the vehicle is purchased or delivered in 2022, then it is not subject to a lot of this criteria. It's only subject to the final assembly rule. If the vehicle is delivered in 2023, but is a 2022 model, I think that's a good question. If you purchase a 2022 model now, I think you would probably want to make sure that it's the exact same version as the online version, but I think that you might want to reach out to a tax professional to confirm that, or to the IRS, because the IRS is still taking comments on this.
Okay, and then Larry Shedd would like you to discuss the final assembly point to qualify a little bit more.
Okay, so the final assembly rules mean that the vehicle undergoes the manufacturing process, the final assembly portion of the manufacturing process in North America. So North America I think for purposes of this, it includes Canada, Mexico, the United States, Puerto Rico, and Washington, D.C. Although I don't think there's assembly plants in Puerto Rico or Washington, D.C. So it would have to take place in those places, and it would be the last step of the vehicle manufacturing where the vehicle is assembled. So the components of the vehicle and the parts of the vehicle don't necessarily need to be manufactured in North America, but they do need to be assembled in North America.
Okay, and will the Aptera 3-wheeler be eligible? This is from Bruce Miller.
No, it's only 4-wheel vehicles that are eligible to travel on public roads and highways. So, but no motorcycles, no e-bikes, no 3-wheeled vehicles, not for this tax credit.
Okay, and then we have our final question. We said that plug-in hybrid electric vehicles only qualify for $3,750. Can we clarify? I thought that they qualified for the full $7,500.
Okay, so let me go back to that slide. Okay, so I apologize if I wasn't clear on this. So plug-in hybrid, there's a formula that is used to calculate the 30D tax credit amount in this interim period. So this is just from January 1st through the new guidance in March. And for plug-in hybrid electric vehicles, all the ones on the market at least are qualified for the $3,751. If it's a plug-in hybrid electric vehicle with a bigger battery, it will qualify for more. And there will be a number of plug-in hybrid electric vehicles that do qualify for the $7,500, the full amount of the tax credit.
And that's the ones that have at least an 11 kilowatt hour battery, right? Which is a lot of them.
Yep. In order to qualify for the full $7,500 tax credit, the battery size would need to be 11 kilowatt hours. And there are quite a few plug-in hybrid electric vehicles available on the market in the US that would qualify for that.
Okay, well, that about wraps up our webinar today. We have recorded this. We will send you a link to the recording as well as to all of the links that we put in the chat. I know that some of you are wanting help answering some of your questions, and we will include the email address and phone number for our EV support program in the follow-up email so that you can get answers to your questions. We know that this is a complex topic, and we are glad to help you and glad that you spent your time with us today. And on that note, we hope you have a good rest of your day.